Even the world's greatest investors make mistakes, and sometimes big ones. A new book, Big Mistakes, The Best Investors and Their Worst Investments, explains key lessons and money-losing investment examples from legendary managers such as Warren Buffett, Stanley Druckenmiller, and more. The author of that book is Michael Batnick, and he joins us now on set. It's good to see you.
Thanks for having me.
Congrats on the book.
Thank you.
All right, so you say this in the preface. This is not a how-to book. So what is it?
It's not even a how not to book. This is a book that shows that beating the market is extraordinarily difficult. Whether you're just managing your own 401k or $1 billion, it's hard for all of us. So I wanted the reader to read this book, understands that mistakes are going to happen, take them in stride, and don't be paralyzed by them. Very
interesting part of the passage here. You say the most important thing successful investors have in common is worrying about what they can control. They don't waste time worrying about which way the market will go or what the Fed will do next or what inflation or interest rates are going to do.
Yeah, so a lot of investors fail to have a plan for failure, right? There's a lot of ways that markets can go wrong. JP Morgan did a study showing that 40% of all stocks have a catastrophic decline that they never come back from. Beating the market is hard. There's a lot of really lousy stocks out there. We spend a lot of time looking for the next Amazon or the next Microsoft, but often we're left with a GoPro or a Fitbit.
So you talk to, you focus on a number of very big name folks in here, Warren Buffett, Stan Druckenmiller, as we said, Chris Sacca. What's the big takeaway from each?
Most of these mistakes that they made were not mistakes with the spreadsheet, an unrealistic growth rate or an inappropriate discount rate. It was behavioral mistakes, not even preparing to prepare for failure. How am I going to react if and when this goes against me?
Do you think, by virtue of some of these mistakes, that these folks are better investors as a result of it? It's not like Warren Buffett's had a million errors, or he wouldn't be who he is and have the title of the Oracle of Omaha, et cetera, and the tremendous wealth that he does. But he has made some mistakes along the way that you focus on in the book.
Yeah, well, Warren Buffett, his mistake was just being overconfident. None of us are going to have the opportunity to buy a company with shares of our own stock. But overconfidence is just something that we all deal with. Everybody goes into an investment thinking that it's going to go higher, right? Nobody thinks, man, this is probably going to be a failure, but I'll go with it anyway.
So I wanted to ask you, because I just full disclosure, Michael and I worked together for the last few years, and if I sound smart on the show, it's because Michael helps me with my preparation each day. But I wanted to ask you, you put a chapter in the book about your own mistakes, and you were a very active trader, and you were someone that probably made all the errors listed of the other investors in the book, and then some new ones. Is there anything that you think you're going to do twice? Is there any mistake that you know you're susceptible to, no matter how much you're aware of your own, mistake-prone behavior?
So the stock market is a great opponent, and I think that the market is just a petri dish of making bad mistakes. So I fully understood that because I was making these mistakes every day and documenting them and writing them down. So I just stopped playing that game. I had no interest in competing against them anymore. So I just stopped, and I don't think that I'm ever going to become a trader again.
So I agree with your approach. I wrote a similar book, or different tack, billion-dollar mistake, a few years ago. And two of the things that you identified were leverage, which I found consistently, and lack of risk management. What are you going to do there? How prevalent are those in terms of all the mistakes that are made?
Huge. Something called the endowment effect. The moment that you buy a stock, you immediately think it's worth more than you did before you bought it. So if you buy a stock for 100, you're not going to sell it for 90. You want to sell it for 120. So that mistake is a thread throughout the entire book, for sure.
Congrats again.
Thank you. Thanks
Wish you well with this. Big Mistakes, The Best Investors and Their Worst Investments. Michael Batnick is the author. There it is. Go pick it up. Enjoy the read.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.